Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you haven't. Just remember the disclaimers below. Nothing should be construed as financial investment advice. These are just my opinions, thoughts on the market. This is made for educational and conversational purposes only. It's not to be tended as a buy or sell recommendation. If you do invest, just remember consultant advisor. So, anyway, let's get into this stuff. I really wish I could do more than a finance channel, but for now, I don't really can't do that right now with just rules and I'm employed and so there's a lot of different things. So, first thing I want to get into is just this came across my mind. It was on CNBC. Wall Street Journal, Palantir thinks college might be a waste, so it's hiring high school grads. Tech company offers 22 teens chance to skip college for a fellowship, which I think is absurd. I mean, I'm not saying college is perfect. It's not. And I'm not saying it's a true indicator of what someone is in the real world. And it is overpriced greatly. Part of that is asset price inflation. And I would say if we actually stop propping up markets, then it's still recording. If we stop propping up markets and allowed a deflation, then I think we would actually, I think we would actually, college costs would come down. So anyway, I mean, personally, the reason I don't think it is school's always been hard for me. I've never done well for a long time. Growing up, I didn't always get the best grades. I was learning disabled. And so when I got my college degree, it was actually a real accomplishment. And originally I wanted to be a cop. And anyway, is this really, I mean, something came on my computer, but I didn't really get an update. But anyway, I'm going to keep going and I'm going to keep screening. But I ended up going to college, got a college degree, could not really get a job after the '08 crisis. So I went to grad school and I couldn't write to save my life. And so I remember I kept writing. My dad decided to offer. My dad was an attorney, so and he kept working with me and working with me. And then he used to have to tear down my papers and make me rewrite them, sort of like a bona fide hard ass. But anyway, one day it just clicked and he would be like, rewrite this paragraph. And I was like, I wrote the paper. I just clicked and I was like, I know I'm writing well. I know I'm writing, no. And so I gave him the paper and he said, did you plagiarize this? I was like, no. He's like, you did not copy this? And I was like, no. He's like, all right, I'll take your word for it. He's like, this is like 20 times better than anything. Normally I have to, and then after like a week or two, he's like, gosh, with all the papers you have to write. He's like, normally I'm used to having to tear it down and make you do it again. But now and I became a great writer. I've written some great articles. I personally think I'm one of the best financial writers, just period. So I don't mean to be cocky. I've written great. It's just hard to get the opportunities. I remember when I got an interview with Agora before I became an accountant, they talked to me for 2 hours about what a great writer I was. They ended up not hiring me. Maybe because I'm not just a promoter or BS person that Agora is. I don't care about, look at Porter Stansberry. It's all marketing, all hype. None of them are really good quality analysis. But uh, anyway, and I've gotten, on my Seeking Alpha page, which I wrote about mining stocks. I always wrote some of the best, but stuff. So, but if it wasn't for school, I wouldn't have been able to get that. And everywhere I've gone since basically my second year, I had to go back to accounting school to become an accountant, but everywhere I've gone, I've really succeeded. In fact, I've left a lot of employers sort of butthurt because I left them for a better job, real mature. But anyway, and if it wasn't for my educational background and rigorous studies, I wouldn't have, it did prepare me for the real world. And I'm not afraid to say that. I know that's not the cool thing to say or whatnot. But there is value. Should it be changed? Should some of the curriculum be changed? Could it be simplified? Is some of the history taught? Should it be better or different? Yeah. But this whole stuff about there's no value and whatnot is just nonsense. It really is. Like Thomas Jefferson, the first thing he did, he started UVA. Founding fathers knew, even though some of them didn't have college degrees, they knew the value of education and higher education too. That's why Thomas Jefferson basically devoted his life to UVA. Thomas Jefferson in UVA. That's what he's known for. Thomas Jefferson, UVA. So look at him. Thomas Jefferson is considered the father of the University of Virginia because he conceived, founded, and designed the institution, which he called the hobby of his old age. Now, I've been to Monticello, and he was a really avid reader. He had his own library. He dedicated his efforts to create a public university in 1819. And he believed it was vital for, I don't know if it's democracy, but they believed in a republic and whatnot. But yeah, even the founding fathers were shared the same opinion of me. So, and if you want to know why if you don't like the way this country is going, you feel it's one of the reasons is because academia was surrendered and we let them subvert academia. It is vital. So, anyway, let's go back. Let's go to finance. But I'm just saying this Palantir, all they are is crony capitalism. They're probably hiring a bunch of people with connections so they can cipher off government contracts. In fact, look at this. Sorry to go on a rant. Nancy. Uh, all right. So obviously, oh, Palo Alto. So sorry, wrong thing. Palo Alto, Palo Alto. So Palo Alto, they sold Palo Alto. So Palantir's different. Sorry, my mistake. So fear and greed. A lot of people are calling for the top, but I would want more of an extreme greed or greed before any major sell off. So I don't see the market selling off right now. So it could be in the future, but I think it will. Obviously, the opinion of this channel that this market is going to enter a long-term bear market once this cycle top is completed. So then here's the other thing. Looking at this, home sales are collapsing in a shaky economy. So today's volatile economic climate, real estate is expecting notable increase in the number of home purchase agreements falling through. So buyers and sellers are facing heightened uncertainty. And if you look at this, it was 8 hours ago. So you can tell, and the reason why buyers and sellers and home sales prices are falling apart is because the rise in failed home purchases is because people are losing their jobs. If you don't have jobs, you don't have an income, you can't get a mortgage loan. Doesn't matter if interest rates are at zero. And no one has, 500,000 to 20 million lying around. So going back, I actually went today to townhouses in my neighborhood. They're ranging from like 1.5 to 1.9 million. Whew, you want to talk about money. And so we just wanted to go see my wife and I and my kid. And we had no intention, but I couldn't afford that. And it was unreal. Talking, the most insightful thing I got was from the real estate agent. Real estate agent, she had a baby of 9 months, mine's like six. And so we started talking, and she was like, "Yeah, it's so tough, and yeah, the anxiety's bad." And she's like, and then she talked about these pills that she was on. And I'm not gonna say names or public or anything, and I don't even say my name publicly. Anyway, long story short, I was thinking, well, if you look at it, look at, right here, all these home sales collapsing. So a woman's probably hasn't sold. Who can afford, $1.5 million townhouses? Uh, so she just had a 9-year-old. I know about having kids. Kids can be active, rambunctious, and babies have no concept of like I'm falling off. If I go over there and I take one more step, I'm gonna fall off the bed and hit my head, and it's really gonna hurt. And so maybe I shouldn't go there. So I'm like when I'm around my baby. Right now, my wife and is with the baby, but I'm always constantly. It's never ending. Eyes on her. If she gets close, even remotely close, not in the middle of the bed, she's in the middle of the bed. It's going to take a couple of dives or crawls to get to the. But if she's even close, like just basically not in the dead smack middle, I put my hands on her ankles just in case she tries. So it is exhausting. So you got your baby, you got to take care of. She's a realtor, and realtors generally make commission. So you don't know when your next check's going to come. You have all these home price cancellations, all these people who can't buy homes. So I can't imagine the stress that this realtor is under. So I mean, a lot of people, realtors, maybe they get bad raps or not, but I think this woman was a nice person, selling, where she is or not, I don't know. But if you look at it, there's no jobs, no economy, probably working on commission. So I can see why these people are on antidepressants. So she was talking in context because, you're worried about your kid. You always think something's wrong, which is true, but I was thinking broader, like, oh gosh, the job, the commission, you don't know when your next check's gonna be. So anyway, let's see what else. I had this in the email. Here it is. Some cracks are showing up in the credit market. Speaking of, could this translate in the broader sell-off? Well, maybe in the future, but not right now. So, series of bankruptcies have triggered billions of dollars of losses for asset managers, private equities. So, this is private credit versus the S&P. The green is S&P, and these are all private capital. You can see Arias Capital, Blue Owl, Blackstone. They're not doing very well. So, and then here it is. Leveraged loan market is on track for the biggest losses in years. Several high-risk corporate borrowers have collapsed. Leveraged loan and junk bond markets. And if you look at this sunk bonds all the way down. Really. Doing poorly. Tricor, I've already covered that. And if you didn't hear from me, look at this: 4 billion lost by First Brand's debt. So, you look at this, the loan market, it's getting bad. So this is the other thing I want to talk about. Chipotle stock creators this job say young people without jobs can't afford their food anymore. And then here it is. Chipotle indicator is this, of course, a recession or not? So first of all, yeah, I think this is a sign of a recession. Millennials and Gen Z, they can't afford a $15 to $20 burrito or burrito bowl, and so they're not going anymore. They're either skipping meals altogether, or maybe they're buying one burrito and they're just cutting it in half and they're having it for dinner and lunch. Or maybe I know some people that buy the foot long at Subway and they just cut it in half and have one half for lunch and then half for dinner. And I'm just gonna go. The other thing I want to get off my chest, I saw these people, these dumb comments like, yeah, it's cheaper if you cook at home. If you're cheaper, when you're working 9 to 10 hours a day, you have kids, you have wife, you have everything. Sometimes it's a hell of a lot easier to take takeout and just have dinner ready when you get home. Everyone can be fed and you can go about your way instead of coming home, cooking, getting all the ingredients. There's the pre-made, then there's cooking of the meal. And then you know what? You have to clean all the dishes. Sometimes it's good to just take that burrito, open the package, throw it in the trash, you eat it, crumble up the bag, throw it away. Especially when you're working 9, 10 hours and then the commute to work is about an hour and a half. It's like 10 to 12 hours at work. Like, who has another 1 to 2 hours of cooking at home? And you have to remember, cooking doesn't just mean cooking the food and then you're done. You also got to clean the dishes. And if you don't clean the dishes, it's fine, but you got to rinse them and then put them in the dishwasher. So it's a lot of things. And then you got to clean the table, uh, and then put everything back. If you open something new, you got to put it in Tupperware, you got to put in. So anyway, cooking from home or buy coffee and make coffee at home. Yeah, not everyone has. I actually make my coffee at home, but I have these grounded up. I don't get the whole beans, but the grinded beans. I just put them in these little, they're sort of like Keurigs, but at home, and then I have to wash them. But sometimes when you're going to work, you just want to buy the cup and go on your way. You don't want to have to make it and whatever. None of that. You have tight deadlines, so that's an extra 20 or 30 minutes, or even 20, 30 minutes, and then you got to get a proper thermos, and then you could spill it. Instead, it's already home. It's in that little cup with that round thing. You're not spillage going into work. So that cook from home meme or whatever, yeah, what world do you live in? And if you do think that, just probably a spoiled little rich kid. So anyway, this is the other thing I want to talk about. AI is not the major reason for rising unemployment. And I actually agree with this. I think the AI story is, I'm not saying AI isn't real or they're not doing it, but I think it's a convenient way of, oh yeah, all these job losses. Instead of talking about how bad the economy is and destroying investor confidence, they just say, oh yeah, it's AI. Don't worry about people not having jobs. AI is going to do everything. And it's creating some sort of parallel universe where job losses are good and whatnot. So anyway, yeah, I mean, I agree. I don't think AI is, and basically in this article, AI is not the key factor behind the rise in unemployment. So let me see. I forget where it said, but basically it compared states, and basically it said states with the most amount of exposure to AI actually had the least amount of job losses. And that's what it said. And I agree. I don't think AI is the reason. I'm not saying I don't I'm not I've been critical of AI. I think it's but I don't think it's the reason the people are losing their job. So here it is. Goldman Sachs says demand for gold is not just hype, predicts the US could still see a repeat of Nixon era spike. And this was October 17th. Of course, it's 11 seconds. Remember, that was a good sign of a top. Always beware of endorsements from the big banks. So anyway, go back into gold and silver. And wow, it's up in the after hours. It was actually down. I'm just going to go into my investing thesis with gold and silver and how I started out. So anyway, let's go to oil. I started out investing in gold around here, 2008. After the crisis, the '08 crisis, my investing career started around here, 2003. And I had to invest in something. And I was like, yeah, inherited like 5K. And I was like, if I'm going to buy something, my dad, he had a financial advisor, lost a lot of money in the tech bubble. And so I made a vow to myself, if someone's going to lose my money, it's going to be me. It's not going to be I'm not going to pay someone to lose money for me. And of course, my dad, he was sort of an old school hard ass. Was an ROTC. He ended up having pronate hips, not going in the military. Uh, but anyway, right here, December 3rd, I decided. So he always badmouthed after losing money in the tech financial advisors. And I wanted to invest to make money, which my prophecy turned out to be right. I didn't think I'd ever get rich on my job. Not me personally, but I think, look at it, layoffs. Very few make money from business now. It's always the CEO or the executive class. It's not really the most of the working people in it. That wasn't always the case, but it is now. So I decided to invest in oil stocks, and oil just went to. Let me see if I can get oil price chart too from year 2000. I bought like Suncor, Exxon, whatnot, but we'll just do this. It was like 2003 or 2004. If you look at oil, it just went from like 31, I think it was around here, 33 all the way. And I sold into May of basically when I graduated college. So I was like 127. I invested in 2003 and I just kept working. And my dad always made me invest a portion of my money. That was sort of the speculation to go in the house. So I ended up getting a really good sized portfolio. It's a lot bigger now, but so I invested in oil, and I remember Exxon had record profits. And so I took some of that money I spent. I went to Vegas, had some good times, did a little bit of vacation. But going back to gold, this is when I learned about physical gold, '08. And this is actually my biggest regret investing. Now, when I say regrets, I don't mean like I could have bought Amazon. I should have bought Amazon. Or I should have bought Apple in 1998 when it was $7 a share. I should have bought Bitcoin, or I'm talking about within reason, because I was into gold and silver because I finally learned about monetary system debasements. I became and after '08, I didn't really like the explanation about how it was just because of a lack of regulation. So I started investing. It was like '09 around here. And I bought physical and I bought the miners, and it went all the way up here. 2011. And I didn't really sell much. Then it went all the way back down. I lost a lot of confidence. It's like June of 2000, like 2012, I went into precious metals and I sold it. And one of the reasons I went in selling is when I first bought gold, it was like I got scammed out of these into these numismatics. I didn't. There was no one really to go to. My family didn't know anything about gold and silver. They didn't know about the markets or anything. Anyway, so I looked at my receipts and I was like, the silver I bought in '09, I wasn't really scammed on. A little bit overpriced, but actually some of the premiums nowadays, meaning in COVID or whatever, those are actually cheap premiums. But and so anyway, all the way came down here. But my main reason, my regret in bullion is was I sold some of this and I made, three times my money off it. But if I bought like wheat and precious metals, silver wheat at the time, I bought, who knows, name that royalty and streaming, Royal Gold, Franco Nevada, all that. Like I would have made so much more money. And I was a gold bull. I bought AEM, Anglo Eagle Mines. So anyway, 2012, and I was selling precious metals during the crash, 2013, 2014. 2015 is sort of when I walked away from precious metals. I started questioning my beliefs because I saw just a lot of people in the bullion industry. They didn't believe it, the stuff, the hype. In fact, a lot of them sold precious metals in 2011, meaning selling their own personal holdings. Now, granted, they never told the clients. In fact, they were doing hard sells to get even more sales. So I love how these bullion companies are not making money anymore. I think it's poetic justice personally, but I was always a buy low guy. So when gold started, I started buying again, physical and mining. And I kept buying, I kept buying, I kept buying. And then it spiked up. And I even bought some during the spike up of 2020. Then it went down again. And I kept buying. I didn't buy all that much. I should have bought a lot more. And eventually, which is 2024, that's when it spiked. I learned a lot about the losses and everything else. In fact, the fact I so questioned myself around 2006, 18 to 2020 after that correction. I actually sold all my uranium stocks because I was a uranium bull. And I said, screw it, I'm going into gold and silver. A lot of these shortage stories and whatever. I can't follow all these markets. And even though I'm a big believer in uranium, I just can't wait for it. So funny thing is, that ended up being close to the bottom, true believers. And that's why I say never call anyone dumb money or was at some point everyone is dumb money. And if you're like, no, I'm not dumb money, well, have you won every trade that you've made? Every investment you've made has been successful? No. Everyone at some point in their life is dumb money, me included. That's why I'm saying don't be cocky and don't say, oh, they're dumb money or whatever. Even though sometimes I do it on this channel, the hedge funds right now are the dumb money. Historically, the retail was, but now it's the hedge funds. But I would buy, and then after the breakout in 2024, since I was buying all the way dating back to basically December of '09, I had buyer's exhaustion. And this is one reason I expect a sort of dip. I don't know how the dip's going to be. We'll go to 5 year. So you can see 2024. This is February 2024 is what really when I stopped buying. And this is when just everything started going up. And now it's down. Now, a lot of people say there's like an A wave, now we're gonna have a B wave bounce, and then a C wave down, and it's gonna go to 3,700. I don't know. I just think we're in consolidation phase, and then there's one more upswing, close to 5,000 probably. And I think silver is gonna break 50, go in between 60 to 75, maybe 80, 90. And but I'm not buying because basically I've been buying since December of '09. Pretty much why. I don't need to buy anymore. I've been buying for too long. So anyway, I think silver and gold is still in consolidation phase. I like to see where it goes. And I like to see where it goes. And just remember, nothing should be construed as financial investment advice. These are just my opinions, thoughts on the markets. I wanted to give my investment background and what I did, just so you understand how I'm thinking and my talking about. And just more disclosure on uranium. I was buying that since like 2012 all the way up to, I don't know, 2016. And then I just sold and, I got my losses and didn't need them this year because I'm not a tax advisor or anything, but I just what I personally do offset losses, wins with losses. And I have a lot of wins, more wins than losses. So if you can do that, consult a tax advisor, see if you can, see if it works for you. But anyway, hit that like button, subscribe. Remember, not financial advice. And let's look to see what happens because I do think after this consolidation, there's one more upswing, gold and silver. But I think that'll be it. You don't sell during that upswing. That's it. At least for 6 to 7 years. So be careful, be nimble, trim your gains. And remember, this is what I say. When you buy, when the bull market begins, you just want to reduce your exposure. I'm not saying percentage wise, but maybe units. Let's say you bought 500 shares of Anglo Eagle, goes up, now you have 475, you sold some. Goes up, you have 425. Goes up, you have 300. Goes up 100. Goes up, put a stop loss. This is parabolic now. Who knows? Next upswing, when silver breaks 50, gets to that 60 range, I'm going to have stop losses on almost everything I have. I might have a mass liquidation for all I know. So anyway, that's all. Just remember every trade you make should be yours. If you're going to blame me or somebody else, so don't do it. So hit that like button, subscribe. I'll see you next video.